Happy Friday. Welcome to today's edition of Toggle's Daily Video Insights. For those of you who are joining us for the first time, we are doing these overviews of insights produced by Toggle every market trading day. My name is Jan. I'm one of the co-founders of Toggle, the system we use to pinpoint drivers and interesting price pressures across thousands of US stocks. And if you'd like to see more of these, subscribe to our YouTube channel or go to toggle.global, where you can also try Toggle for yourself. Now, the focus today is going to be on a company that probably many of you will be quite familiar with, Booz Allen Hamilton, obviously a giant. And what we're going to look at is this series of price pressures that have been emerging and highlighted by Toggle, starting at the low back in March and really then climbing all the way up to the recent levels here in the 80s, mid 80s, and so on. And so as you can see below, actually there have been a range of different drivers that have gotten the stock to where it is today. Now, some of them were technicals, there are seasonality and so on. The one that we're going to take a look at today after the run-up that we've just seen is momentum. And in particular, what Toggle is analyzing here is the likelihood that the strong momentum that has been generated with this rally is actually going to propel the stock forward. And as you can see here, the rally here suggests that it could reach as high as just over $90. Clicking on the insight, we can take a closer look at the actual analysis behind it. And as you can see, again, Toggle is looking at about 13 similar occasions in the past where momentum indicators were in a similar position as they are now. And subsequently, within a 3-month window, but certainly potentially quite a bit earlier, the stock had reached a level 10 to 11% higher. Now, why am I saying possibly earlier? What Toggle basically does is it goes back through these 13 occasions. It looks at what has subsequently happened. And of course, sometimes the returns were much sooner. Sometimes they took longer to realize. And so the confidence interval really gives you a sense as to how much sooner the price could reach this level above 90, and then also how much more it could exceed. Again, just looking at these past returns. So of course, there's no guarantee that it'll happen again, but it's an interesting study of history to get some sense of whether or not momentum indicators are relevant at all. Now, of course, if the price action starts to deviate meaningfully from this kind of trajectory and really drops below the red line, this is the point to reassess the thesis and possibly place your stop loss level. Looking historically, you can see that actually when you've had this kind of recovery in momentum in particular, starting from below zero, that just visually inspecting some of these levels, you can find that they have in many cases coincided with a rally in the stock. Now, always worthwhile checking out the past performance. Here you can see the actual returns from these past episodes. So studying 13 episodes and a window of about 20 trading days across each of them, you can see that actually in subsequent 3 months, a handful of outcomes were around minus 5%, but look at the large number of outcomes that were substantially positive, in some cases meaningfully higher than 10%. So what you would judge from this is that the risk reward from this looks quite attractive. In other words, the risk return looks reasonably one-sided. And that is also what the P&L here suggests, because you've basically a dollar invested here would have resulted in $3 of profit. So much for BAH today. In the daily brief, which should be in your mailboxes already, we also talk about the roaring economic recovery. Hope you join us again on Monday. Thanks.